Hello and welcome back to another video. So today, for the first time, I'm going to run through my portfolio. So this is my portfolio of stocks that I have selected and chosen and purchased using my kind of stock selection system, which I've done a series of videos on using my checklist. So these are all ones that have passed the checklist score, so they all have 75 or more points and have either been below my value threshold or have come close enough that I've decided to open a position. So let's get straight into this. If I minimize this slightly. So this is my public portfolio. So for full disclosure, I do have other stocks. Some of these, all the ones that aren't in this are ones that I've purchased not using this system. So these are ones that were purchased before these, kind of several years ago, that some of them are mistakes that I'm kind of foolishly or sensibly, it's yet to be decided yet, which have come down and I'm waiting for them to come back. Whether that's a mistake or not, I don't know. And some of them are just ones that don't pass this checklist at all, but have been doing okay, and I'm just holding them separately to this. And they're all basically just stocks that I bought when I didn't really know what I was doing, and they're just random. There's no real rhyme or reason to why I own any of them, to be honest. But since then, I've developed this system, which is much more regulated. I've got rules and guidelines. As I say, if you don't know what I'm talking about, I suggest go to my channel. I'll link them below as well. But I've done a series of 4 videos on my stock investment process. So this is a portfolio of stocks that I've been purchasing since October the 5th. No, that's on 1 year. I was going to say it's longer than that. Since January 2022. So only a year and a half with this new system. And so far, for all of that time, it's up almost 6%. You can see we've just had a big drawdown. It was at 14% at its height, and this has been through a very volatile period, as I'm sure a lot of you know. I'm quite a UK focused investor. I do have some US stocks I'll run through in a second. I'm quite a UK focused one, and the UK market has not been performing well at all over the past 18 months. But thankfully I've had some US stocks in there that have kind of helped balance things out, and I'm quite happy to be up over this period. Year to date, I am up 7.67%. Which I'm very, very happy with. I benchmark myself against the FTSE All Share Index, and for those that don't know, that's a huge basket of UK stocks that covers like the FTSE 100, 250, and some smaller cap ones. I think there's about 600 stocks in it, but it basically is just like a broad overview of the UK stock market. So if I can be beating that every year, then I'll be quite happy. So these are real amounts, so I'll run through my purchase in a minute, but this is all real amounts. This isn't the investment platform I've used. You can't purchase stocks through Stockopedia, but just to give myself a bit of privacy, I purchase all of my stocks and investments through AJ Bell. I have a Stocks and Shares ISA, a SIP and a Lifetime ISA with them, so I do all my purchases through there, but I've just replicated all of my trades on here, just so there's no risk of me revealing any kind of sensitive information. But I can assure you this is all exact amounts. I've even included like trading fees and everything on here, and I add my dividends and reinvestments and things on here as well. So this is all as accurate as I can be, to try and be quite open with you. I do have more cash than this available to deploy. I just haven't added it on here for whatever reason. So I have a bit of firepower ready to kind of hopefully pick up more bargains over the kind of coming months, as everything seems to be going down at the moment. So I'll quickly run through. My plan is to do fairly regular, at least monthly portfolio updates. So I think at certain times I'll dive more in depth into certain stocks. So at this time I'll just do quite a brisk run through of what I'm holding. So if we go in order of industry, like cyclicals, energy, that kind of thing. So the only cyclical stock I'm holding at the moment is Tesla. Obviously this is a reasonably over quite a pricey stock, but I think it's reasonably fairly valued at the moment. I haven't bought it recently, as you see. I bought it a while ago. I'm at a 42% gain. It's had a bit of a pullback at the moment recently. I only have a small position in this. I do want to build that position up, so I'm waiting to see if there's a bit more of a pullback. And I think once it breaks a certain level, I might consider selling out of it to repurchase it later on. I've been reading a really good book recently, Stan Weinstein's. So sorry, I just had to look at it to remember the name. It's this book, Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. Because one thing that's been happening to me over the past kind of couple of 2-3 years is I make really good profits on a stock, like 40, 50, 60, 100%, and I don't sell. I'm not taking profits, and then they come all the way down, and I just lose all of my profits. And I've read lots of books, and I know most of them say, all of the legendary investors say, just hold long term, hold long term, hold long term, and maybe that might be the answer for long term success. But I found it quite hard to deal with over the past few years of making lots and not taking my profits and coming all the way back down. So I am reading books such as that one, just looking for strategies for taking profits when they're up there. Still letting the profits run, but taking profits while I'm up there. So let me show you on here. If we go to Tesla, so I bought in down here. I did actually buy in down here as well. Well, maybe not quite at the bottom, but I think I did buy in down here and sold up here. So I've already had a leg of profit taking. I bought in here and it's running up here. And basically the main, summarising the book in a couple of sentences, is basically you use the 150-day moving average to time your entry. So that was a poor entry there, really. Normally I'd enter, using my new strategy, I'd enter here and then I'd sell when it breaks through the 150. So that's why I've got that red line as indicating a stop. If it drops through there, I'll sell. But my idea is if it drops down to there and then rebounds again, I'll probably top up my position, because that's probably a good indication it's going to carry on up. But who knows? Who knows? I'm just speaking my thoughts at the moment. So yeah, the reason for holding Tesla, all of these pass my checklist. Tesla's score is a 76, so it only just passes the checklist, but it has done. A play on a very good, well-run business, some of the best operating margins on their cars in the entire industry, the best, I think. And they have plays on other avenues aside from cars, so all of their AI self-driving technology that they can license off to all of the other car companies if they want. It's not doing much now, but they've got like that solar side of the business as well. There's lots of things that can add to long-term value here. I think it's a really good business. It's just the only question with Tesla sometimes is a valuation question. And I really like Elon Musk as well. I think he can rub people the wrong way sometimes, but I admire his inventiveness, the way he drives basically the world forward. He's constantly trying to push the boundaries of technology. I very much respect him for trying to settle Mars and all that kind of thing. I think he's a good person to have in the world. So yeah, that's the reason for having Tesla. Financials, stocks next. So I'm going to put these back in alphabetical order because this is confusing me. AJ Bell. So they are, as I say, they're who I have my. That's who I invest through. So I've got my ISA as set up with AJ Bell. So I had a knowledge of the company before I ever started researching them. But they're a very well run company. They score an 87 on my checklist, which is one of the highest scores that I've found. Yeah, they're just very, very well run company. They have, as well as their online platform on desktops and things, they've released a dedicated mobile app called Doddle, which I think is starting to gain a bit of traction as well, which is it still offers all the ISAs and things, but it's their play on trying to get into the kind of eToro, Robinhood kind of play, like appealing to a younger audience, I think. So they've got other avenues they're working on to try and build revenues there as well. I'll try and speed up a bit now because I realise I'm taking a long time. This is supposed to be a very quick run through. IG Group, one of the other financials I have. So they are an online trading platform. So yes, very much more so trading rather than investing like AJ Bell is. They have the trading futures and all that type of thing, and they have spread betting. So I've got a spread betting account with them actually, which I only have a very small amount of money on, kind of a few £100 just to kind of experiment and play around with that. But maybe it's something I'm looking at to ramp up, possibly if I can find a trading strategy that works. Because I don't have any intention of pulling anything out of my ISAs, so it might be nice to replicate the trades I'm doing in my ISAs in a spread betting account and then actually withdraw the profits and have something to kind of play with in real life. Impax Asset Management is another financial stock I've got, who are an investment trust fund manager. So they specialise in sustainable environmental stocks. That's what their investment trusts are based around. Again, I actually have an investment in one of their trusts, Impax Environmental Markets, and yeah, they passed my checklist with a score of 80. They're reasonably well valued now, so I'll show you on here. The yellow circles are my entries. This purple line is what I consider fair value. So I will buy stocks, even though I bought up here, but this line has been moved down since that purchase. So I will buy or consider buying stocks once they have passed my checklist and they are below this valuation line, which I use a value calculator for. Again, if you don't know what I'm talking about, watch that series of videos that I mentioned earlier, and it'll be in the description below. So yeah, I've entered in here. It's the UK market as a whole is struggling at the moment. I don't think there's any real reason that should be having this huge decline. The financials are good. It's got good margins, growing revenues, growing profits. It's just kind of the cyclical nature we're in at the moment. I have no doubt once the whole economy turns around and people start investing into stocks and also for their company into investment trusts and things again, it will start soaring again. I mean, its profits and revenues and everything are higher than it was at its peak, so, and they haven't diluted the share, so there's no reason it shouldn't get back up to those levels and beyond. And finally, in the financial sector, have I got any more in the financial sector? No, that's it. That's it for the financial sector. So next up we have healthcare. So I've got a few healthcare stocks. Bioventix is a UK biotechnology company, and they do. So I had to do quite a lot of reading and research on this before I understood it, and even though I have wrapped my head around it, I still find it quite hard to explain. But they create what are called sheep monoclonal antibodies. I'm not sure if I've said that right, but effectively, companies ask them to create these antibodies that can be used in diagnostics, so like in blood tests and things. So they'll have these antibodies that they put into the test kit when you go to the hospital or something. When you're getting a blood test to test for certain illnesses or diseases, these antibodies will be put into the kit, which will react with your blood to let them know if you've got certain diseases and that type of thing. So they will create these antibodies, and companies will come to them to ask them to create antibodies for certain illnesses and diseases, and they do this in quite a complex way using sheep monoclonal antibodies and things. I think some companies do it with rats and mice and things, but they do it with sheep. But effectively, yeah, they're creating antibodies that can be used in mainly blood testing diagnostics. So they're a very good company. They've passed my checklist, score of 82. They're one of the few UK healthcare companies I can find that do pass my checklist, because obviously you've got all the big names, but a lot of them don't tend to pass my checklist because they haven't got the growth that I'm looking for, but Bioventix does have that growth. And I've got a small position in them. You can see a starting position. I've bought them above the valuation line, so this is my fair value line, but they were in a rising trend, and I did want a position in them because they're a very good high quality company. As I say, one of the only UK ones I could find that passed my checklist, so I took a small entry there, and I will, if it does fall down below, I'll continue to hold that, and I'll just top up my position down here. But if it carries on going up, at least I've got some kind of exposure to the company. Also in the healthcare, the other three healthcare stocks I'm holding at the moment are all US companies. So Doximity, they're quite a small company. I mean, for US standards. They're 3.4 billion market, which is quite big for the UK, but for US it's still quite small. They are basically the LinkedIn of healthcare. So they have I hesitate to call it a social media platform, but that's kind of a reasonable way to think about it, a professional social media platform, and it's for use by healthcare professionals to put journals and articles and things up, but also they can use it for actually writing prescriptions and kind of more practical stuff such as that. It's got some pretty impressive statistics. 80% of US physicians are on the platform. All, as far as I understand it, I've read this, I don't know how to verify it other than going to the universities, but apparently all medical students in the US are made to make, as part of their course, that they have to make a profile on Doximity, so that when they graduate they're set up on it. So it's got a huge adoption. So obviously that's limited space to grow in terms of user numbers, but the way that they say they're going to make their money from it, increase revenues, is providing more and more and more services on the platform and gradually increasing costs on it. So one of the big ways they make money at the moment is hospitals and things will use it to recruit, and they have to pay a fee to have the interviews and recruit candidates and things through it, as well as numerous other options as well. So yeah, I've got a play on that one at the moment. Again, I've done a couple of purchases in there, kind of building up a position. That's in a falling trend at the moment. Another one I have is ResMed. So they are. I may as well go on the chart. It's a bit more interesting, isn't it? Than oh, I can't see it now. Oh, there we go. So ResMed and Doximity actually are both in a pretty terrible downwards trend at the moment, even though they slightly missed on their guidance, but still very profitable. So ResMed produce respiratory equipment for the use in the home for treating things such as sleep apnea, which is when you kind of you pause breathing and things when you're sleeping, which causes snoring and other healthcare. So I pulled this up because it's quite difficult to explain. So these kind of masks that people wear when they're sleeping at home. So all things based around that, and they also make respiratory. I'll show you ventilators. That's the word. So everything to do with breathing and helping people breathe better and treat kind of chronic diseases and illnesses that people have to do with breathing and airways, mainly around sleep. But yeah, they're a good high quality company. Again, passed my checklist. They've got a score of 82. Doximity, I don't remember if I said, but they have a score of 77. So ResMed are doing very well. All of their revenues, profits and things are trending upwards. They had this profit warning here, but where they had a huge crash, and they've continued since then. But it wasn't, in my opinion, it wasn't drastic. It was they missed guidance by a slight amount. That basically the market was expecting more growth than they actually delivered, but they're still delivering growth. So I think long term still a very successful business. I am going to top up, but as I was saying earlier, I'm being a bit more tactical with my entries now, since reading Stan Weinstein's book and a couple of other books. So I'm probably going to wait for it to. This is going to start coming down, and I'm just going to wait for some sign of a reversal before I jump in, rather than the old saying of don't try and catch a falling knife, which is what I've done lots of times in the past. I'm going to wait for this to show some kind of bottom or reversal before I start topping up my position, but I will be topping up my position down here. And I've got this stop in here that if it does fall past here, I'll probably sell out of there because it was just an initial small entry position. Wait for it to find a bottom and then load up as it's coming back up. Okay, that's ResMed. And the final healthcare stock that I have is Viva Systems. So again, I've done a few purchases in this one to build up a small position. So just to let you all know, none of these were, in terms of a cost basis, were full positions at the start. So my full position it's around £5,000 to £6,000 would be a full position. So because everything's going down at the moment, it's a mixture of some things are going down, so I don't want a full position while things are still going down, and some of them I missed. Like Meta has gone on a tear. I had 4,000 in there, but it started running. It's done really well for me. It's now up to 7,000, but I didn't have time basically to build a position before it started tearing and it got out of the value range that I wanted to purchase shares in. So Viva Systems, they are a software as a services company to the life sciences industry. So again, this is one that I had to do a bit of research on to kind of get my head around. But effectively, if you think of the development cycle of a drug from like initial idea through testing through to like Fed approval, all of that, they provide like one portfolio of software that aids in all of those stages and has it so that it's tracked through that whole journey through one collection of software. So it's all what's the word? It's all like unified. So you don't have to use one bit of software for one set of the stage and then use a different company's bit of software for another bit of the stage, which the industry has been. So it's been quite fragmented. They've created software that makes the whole process more efficient and seamless. And obviously, I don't work in that industry, but from everything I've read and from their financials, it seems to be kind of something that's very sought after in the market. There's widespread adoption. They're getting a lot of customers. Their revenues are going up quite considerably. Their profits as well. And this is one that's actually in more of an uptrend than the other two. So this was the valuation line I bought in here, and it's been going up ever since. And I've been topping up when there's been dips and things, and I probably will. So again, to be fair, it's probably not a bad shout to top up now. But I'm just waiting with for those that don't. What's the date today? The 4th of September. October, sorry, if people are watching this in the future. The markets have gone a bit crazy the last couple of weeks. Everything's been crashing, so I'm just holding off for a bit to wait to see what happens. But I will be topping up this position as well. And then on to tech companies. So Gamma Communications is kind of a fairly small UK company, so 1 billion market cap, and they are effectively communications services providers for relatively large companies. So they will set up a company's communications throughout the company. So all of their messaging, video conferencing, telephone calls, file sharing, all of that kind of thing. And they call it unified communications as a service. So from what they're saying, in the past this has been very fragmented again, not very seamless, not very efficient. And they provide products that this is all kind of unified under one service. So a big company can go in and get all of their communications for the whole company set up by Gamma Communications, and it will all run seamlessly and be quite effective. And again, past my checklist, they've got a score of 81, very good financial situation, rising revenues, rising profits, and they are in a very set trading pattern at the moment. My valuation sign is at the top of this channel, so I'm basically just topping up as we're bumping along this channel. And I've topped up a couple of times. I might top up another time at the bottom of the channel if we have a reversal, but I'm going to wait to put my full size position in until we break out the top of the channel, just in case we do fall through the bottom. I've got a stop at the bottom, because if we do fall through here, then I think it's going to fall quite a long way, and I don't want to just hold on to those losses, so I'll sell out, and then if it does fall, I'll buy back when we've found a new bottom down here. But I'm thinking, because we've been going through quite a turbulent time and their financials are very strong, growing revenues, they haven't put any profit warnings or anything out, that it's more than likely we're going to break through the top. So I'll wait until we break through, and then I'll put my full position in here and hopefully just ride it all the way up. Google, I have a holding in Google, so it's quite self-explanatory. So Google, Microsoft, Meta, I picked them all up last year, and they've saved my portfolio basically, because they've performed so strongly while the UK market hasn't really been doing very well. So yeah, Google, incredible company, very well run, great, still growing quite strongly, and they're set to benefit from AI as well, which is kind of the buzzword at the moment, isn't it? So I think it's been a bit of a safe stock to have as well. I've got stops set on Google, Microsoft, and Meta, again on based on these trading plans that I don't want to hold if the America does go into a recession. I don't want to hold all the way back down again. So I'm rising this stop every time we have a dip. I'm rising the stop to that point on the 150-day moving average, which is one of the principles that came from Stan Weinstein's book. So, for example, when we were here, we came down to here, and then we started going up. I moved the stop to that point there on the 150-day. So it gives it lots of room to move. We can have quite severe pullbacks, but I've just been doing that on the way up. So at the moment it's here, just so if we do start to fall, I'm at least locking in some profits. I didn't time Google very well. I bought here and here, so I'm only in slight profit. The reason I didn't buy down here, in hindsight, I really should have done, but this was because of exchange rates. The dollar was so strong or weak. I forgot which way around it was, but it's basically $1.05 to the pound. So any strengthening on the dollar would have just eroded so much gains that I thought it wasn't worth it at the time. In hindsight, it would have been, because it's done such a big move that it would have negated some of that, but it didn't seem a sensible option at the time. But yeah, in hindsight, it was. I also own, so we'll just jump through Meta and Microsoft. Self-explanatory on these reasons. Microsoft obviously is exposed to AI as well. Very well-run business, growing revenues, growing profits. Meta was just extremely undervalued in my opinion, so I started buying it here, which was just above my line because it had this dip, and I thought, oh, maybe that was the bottom, but no, obviously not. And it kept coming down, and I was just buying and buying and buying on the way down. I missed this very bottom bit, but that's fine. And then it came up, and it's been on a tear away ever since. And again, I'm doing a rising stop loss on this because I just don't want to see this come all the way back down and lose all of those profits. And the same with Microsoft here. So that's been coming up. I bought down here. I also bought all the way up here. That was back when we were in that bull market, and I thought this was just another pullback. And I just researched it, and I thought, oh yeah, great, let's get an entry. And then ever since, so that wasn't the best timing, but it is what it is, and now we're back up to profits, so that's all fine. And then finally, in the technology sector, we have Kainos, or Kainos, I'm not sure exactly how you pronounce it, but this is another UK-based technology company, and they do a couple of things. They are partnered with Workday, so the big US company that provides all of the Workday software for business and things. They're partnered with them, and they sell their products, but also follow up services. So they'll go in and help them set it up and provide ongoing support for that. So they make a lot of revenue through that. Yeah, they also have their own digital service kind of for supporting and developing online platforms for governments, kind of commercial and healthcare sectors. So recently they redid the UK driving test website. So the website you go on when you're doing your driving test, your theory test and booking and all that kind of stuff, they redid all of that and made it far more efficient and cost effective for the government. So they do that type of thing that's purely their own work, and then they are also partnered with Workday. And they've had really good growth over the past years and don't show any signs of slowing down either. They're spread across Europe, the UK, and they do work in the US as well. So I've been buying these below the value line, and again with the once it breaks out of this resistance line, I'll top up again there, and hopefully that will get back to growth. But as I say, UK stocks the past year or so, some have been moving, but a lot of them haven't been doing much. So that's the tech stocks. We're getting there. And then the final category, so you'll notice the final category is basic materials and energy. I don't have in any defensive stocks or industrial stocks at the moment. I have some on my watch list, but they haven't got to an appropriate buying price. But there's very few on my watch list, just there's not many at the moment that are passing my checklist. A lot of the industrial stocks have been hit by inflation and things, and they're just not passing the financial checklist at the moment. And defensive, there's not a huge amount of defensive stocks that do pass my checklist just because they're quite slow growers, and my checklist favours growth. But Monster Energy is on there. It's just that hasn't had a big enough pullback to come into my buying range yet. So there's no defensive or industrial stocks in this portfolio. But in terms of basic materials and energy, so Enphase, so this is a US a company that provides the microinverters for use on solar panels. So they don't actually provide the solar panels, they provide the little unit that goes behind it, underneath the solar panel, that harvests the energy and connects it and sends it through to the house to be used. And they provide an app which can be used on your phone to control all of that, to control where the power's going, when you want to harvest it, and when you want, and you can control it to set your appliances, so say the washing machine or dishwasher, to come on at certain times of day when the power is cheaper, and you can see what power you're giving back to the grid, etc., and what money you're making and all that type of thing. So they do that. The good thing about them is because they're not providing the solar panels, their microinverters can be used on any solar panels, so it broadens their market. And just again, they've got great financials. Their share price has been decimated. If we go onto their charts, so yeah, this was my valuation line down here, and look, it's come all the way back down, which probably says something. So I've entered a position just as it broke through that valuation line, and we'll see what it does. If it breaks through this support line, I've got a stop here. I will sell out, because I think if it breaks through there, this big long-term resistance here, it's going to drop all the way down. So I don't want to be holding for all of that time. So I'll sell out then and rebuy down here. But as I say, this is long-term resistance down here, so I have a feeling it's going to bounce down here. If it starts moving upwards again, I'll start adding on the way back up. But yeah, very good business, growing profits, growing revenues, all of that type of thing. And I just think it's a great play for the sustainable energy play. Solar panels, I think, are becoming more and more popular. There's a lot more people, and they're becoming more affordable as well. So more and more people are putting on their homes, and regardless of where people buy the solar panels, they can use Enphase's microinverters. So I think that's a really good play going forwards. And the other one, which isn't quite as environmentally friendly, but I think essential for the time being, is Serica Energy. So this is quite a small UK-based oil and gas company based in the North Sea. Until recently it was just gas, but last year, or maybe earlier this year, they acquired Tailwind Energy, who were predominantly oil. So now their portfolio was 95% gas, but now it's almost 50-50 gas and oil. So they have a bit of diversification through that. They're not 100% reliant on the price of gas or the price of oil. And it's kind of, it's past my checklist, so it's a good company, very decent profits and things, but though they have been absolutely screwed over by the UK government in terms of the windfall tax. They're getting taxed something ridiculous like 80%, so they're finding it very difficult to make profits. But they have mitigating measures against that, because they're doing reopening oil and gas sites and things. They're getting some tax breaks and things on that, so they're managing to mitigate that to a certain extent. But at the same time, I'm using it as kind of like a hedge, because obviously we're trying to bring inflation everywhere around the world. They're trying to bring inflation down, but if that goes wrong, and everything starts to go up again, that will mean that the price of oil and gas go up, which will mean theoretically that the share price of Serica Energy will go up. And you can see what has been happening recently is the price of oil has been going up and the gas slightly. And Serica had this bounce. It's kind of trading in this range at the moment. But yeah, it's kind of like a hedge as well for me, just against inflation. And that is my current portfolio. So if we go to, you can see, apologies if you can't see, we'll just quickly run through my gains on each. So yeah, year to date we are up, but there's quite a few stocks in the portfolio that are down. Just because of what's been going on recently in the markets. But I have every confidence that all of these will come to profitability, and I fully expect some of them won't, because that's not how stock investing works. But if I didn't have confidence in all of these, I wouldn't be holding them. So yeah, you can see the percentage gains. So my best gainer is Meta, which I've been holding since lows, and Tesla's, and you can see a trend here. It's all the US stocks. So the US stocks really have saved my portfolio over the last kind of 18 months. And the worst performing ones, Impact Asset Management, Doximity and ResMed have just fought, because they're quite small companies from a US point of view. They they're still profitable, but they missed their guidance, so they've taken knocks. But I kind of see that as a good opportunity to build a position in them. And then, yeah, a lot of the financials, just UK stocks in general, have been kind of hit quite hard. So yeah, that is my portfolio. We are, what are we? Year to date, 7.67% up. We were at our peak 16% up, so we've taken a bit of a pullback there, and that turning point is pretty much exactly when the American stocks, the FANG stocks, Meta, Google, kind of reached their peak, and they've kind of been retracing since. And the US stocks, the UK stocks here started taking a huge battering. They have not been doing well over the past couple of months. So I'm hoping we're near a bottom, but if we're not, I'm just going to hold, wait for some signs of improvement in kind of market sentiment, and once there's a definite sign that the markets are starting to reverse, especially the UK markets, and they're starting to be in an upward trend, then I'll start heavily adding to positions. I just don't want to add too much and just see it fall and fall and fall. I want to be fairly confident we're back into an uptrend before I deploy all of my excess cash. So I hope you enjoyed that. Please comment below if you've got any thoughts, opinions. Let me know what you're holding. And I will be doing fairly regular, I think I'll probably do monthly portfolio updates just for how the portfolio is doing. But I'll also do, this was quite a quick review of each stock. I'll do more in-depth overviews of stocks and things as I go as well. And also, if you want, have a look at my website. So I do blog posts on there. So there'll be stuff that I don't cover on YouTube that I will cover on my website, because I'll post. I'm going to start posting quite regularly about. I might do weekly updates on there, written weekly updates on what I've bought and sold that day. That reminds me, actually, I'm going. I have recently. If we go to transactions, I have recently sold quite a few stocks. So these four were being held, and I sold today. I sold these two. So I sold Games Workshop today because for what I was talking about earlier. So it's a bit bigger. For what I was talking about earlier in terms of not wanting to lose profits, Games Workshop was up almost 100% for me a couple of months ago, and since then it's been kind of coming down. And I had a stop loss on it below support, breaking through the 150-day moving average. So that it hit that today, it broke through it, so I've sold it and I've locked in about 65% profit, which I'm very happy with. Calnex Solutions, another company in their set, so they provide support for the telecommunications industry, so all of like 5G and all of the mobile platforms and things need to use their technology to kind of set up systems and things and test the networks and things. But another company in that sector issued a really severe profit warning today, saying that, and their excuse was just that the industry as a whole wasn't doing very well. Their customers were delaying orders and were pushing back projects and things. And Calnex is in the same industry. So I sold that at the open this morning for, on the day, only kind of a 1% drawdown, and last time I checked before making this video it was down 13%, so I did a very good sell there. I still think it's a good company. I think it's just going to be one of those things that we need to wait for the market sentiment to improve in their industry, and then at some point I'll buy back into that stock. YouGov, a similar thing. I bought this not long ago, about a month ago, and it was at the bottom of support. I can show you. Let's show you, shall we? Yeah, YouGov. So there was this quite strong support here, and I actually think I waited for it to get down to here. So I bought in around here, and then as soon as I bought in, it just started falling, and it just didn't show any sign of stopping. So I sold yesterday. So I sold in this as it just looked like it was a completely falling knife, and there didn't seem to be a bottom in sight. Because my intention was to buy, thinking it would be the bottom, it was going to bounce back. So, because it looked like it was forming a trading channel, but that's shown not to be true. It's broken out of that trading channel, So I've sold, I've got out of that. And again, the intention is to, once it finds a base and starts coming back up, I will open a new position. But that was a very small loss. So that was it wasn't a very, it was 15% loss on YouGov, and it was only a 3% loss on Calnex Solutions. On Argentex, again, a similar situation. This was sold just a few days ago. I bought down here, took it all the way up, and it was trying to hold on in this trading channel, kind of like this, and it had broken below the 150-day, but I thought if it was in a trading channel I'd just hold it for the new break, but then it broke through this trading channel, and it looks like it's probably going to be back into a downtrend, so I sold there, took some profits, locked in just over 13% on that one. I just, as you can probably tell, I just don't want to be holding lots of stocks that look quite clearly as if they're forming new downtrends. I don't want to just hold them all the way back down. So I've been a bit more severe with that than I have been in the past. And we'll be sure when things start to look as if they're improving and individual stocks are going into an uptrend, I will heavily enter them in that situation. So yeah, sorry, that was a bit of a detour because I forgot to mention those stocks, but I hope you enjoyed the video. Yeah, please subscribe if this interests you and you want to see how I do long term. Fingers crossed. The next year, 2024, is a bit better than this year has been. But we've still got a couple of months left of this year. I'm very much hoping for the Santa rally. I could very much do with some improved returns over the last couple of months of the year. And yeah, I hope you all have a great day. Good luck with your investments, and I hope to see you here soon.